CK, sorry, very quickly, just the name. What was your short idea for the morning?
That was JSW Steel, which I had said as a positional play. I'm also suggesting that as a day play as well.
Okay, so go short on JSW Steel as a day play as well as a positional play. Great. Thanks a lot for that, CK Narayan, and giving us your picks there. But I want to move to JSPL numbers. Remember, the numbers came out yesterday. I think there is lots more to JSPL than just the numbers, quite frankly. It's also about the deal that they've entered with JSW Energy. What kind of breathing space do they get as a result of that deal? And whether or not the interest payments, etc., get serviced in time as well. Remember, that's been that question mark, and the deal is over a timeline. It's not happening immediately. So that's the other thing in focus for Jindal Steel and Power. But yes, they have sold off a power plant. It should help them. Let's get in Mr. Ravi Uppal on that. Let's talk about the results first, Mr. Uppal. What were the key drivers?
Well, John, the EBITDA improvement that you have seen in the fourth quarter is an outcome of two factors. Number one, much higher volumes and also improvement in EBITDA. As you know, the MIP kicked in only by 6th of February, so it took a while before we could see any positive impact of MIP because a lot of importers were carrying big stocks of steel in their yards, and it had taken right up to the end of April before the stocks were exhausted. But having said that, I must say that even during the rest of February and March, the prices did see an improvement. And adding to that, the imports also started to come down, which means out of the domestic demand, more and more was becoming available to the local manufacturers. So if you take the impact of both of these, we have had an impressive improvement in the EBITDA earnings, as you've seen. Both in the domestic market as well as on a consolidated basis, EBITDA earnings have gone up by nearly 59 to 63%. So I do foresee that going forward, that in the first quarter, there should be further improvement in prices because after imposition of MIP, the international prices have also increased quite considerably. And in some cases today, the international prices are higher than the MIP. So all in all, it will mean that we should get a better net sales realization in the first quarter. And the full impact of improved volumes as well as net sales realization should be seen in the first quarter.
The depreciation cost has pulled down your bottom line significantly and finance costs have made it worse. Going ahead, will you be able to generate an EBITDA high enough to cover these high costs?
You're absolutely right. In the fourth quarter, we did commission a lot of our plants on which work was going on earlier. For example, the Oman plant got commissioned in the third week of March, which is a rebar mill. And likewise, the complete plate mill in Raigad also got upgraded and modernized during the fourth quarter. So, we have to capitalize all these investments so that translate into higher depreciation and more interest cost. So that is something which is there. I think we should be able to utilize the impact of these increased depreciation and interest by ramping up the volumes and having a better realization. I'm quite hopeful that the year 2016-17 will see a complete turnaround of JSPL and we should have a positive earning at the PBT level.
Could you shed some light on the exceptional item, Mr. Uppal?
Well, this is just a extraordinary item which we call mark to market. That since we have invested, made a dollar investment in Australia, depending as to how the Australian dollar moves vis-a-vis the US dollar, this kind of thing it does come up. The Australian dollar has appreciated against the US dollar in the last quarter, and therefore that translated into a kind of gain. So that is what is the item that you see there.
Mr. Uppal, Jindal Power has not done well at all, be it on the top line or the EBITDA. What's the reason for the same?
Well, the main reason for that is the tepid demand for power. The power assets remain intact and fully functional. We had expected that we should have a much higher demand for power, which could not be realized. I do want to say that the fourth quarter, the demand generally comes down because the fourth quarter is neither winter nor summer. So the power offtake generally comes down. But having said that, I must say that the offtake from the industry and the utilities has been low. And but now that the Uday has been implemented, I'm quite optimistic. In about 6 months from now, the DISCOMs are going to come with the new PPAs for medium and long-term supply, and all the capacity which remains underutilized will definitely see an upturn.
Mr. Uppal, if one looks at the debt picture, your debt and interest coverage ratios have worsened this quarter. Finance costs has gone up. Throw some light on this, and what are the ratios that one can expect going forward?
Well, as far debt is concerned, we closed the year with a total consolidated debt of about 46,000 crores, a part of which comes from steel, the other comes from the international operations and the power. And, we are, working very hard to see how we can bring down the debt levels. And some of the divestments we are doing, then we're also relying on the strong internal earnings out of our organic operations. Both of them put together will certainly help us to bring down the debt level. And our own internal business planning is that by 2019-20, we should bring the debt to a level of 25 to 30,000 crores, which will translate in terms of debt to equity ratio of 1.6 to 1.7. That is what we are working towards. And encouraged by what we have gone through in the fourth quarter and what we have seen in the early part of Q1 this year, I'm quite optimistic that we should be able to do well.
Mr. Uppal, this brings me to the next line of questioning, the debt reduction drive for which you've entered even into the deal with JSW Energy. We do know the main deal contours, but tell us about the timeline of the cash flows that you are to receive from JSW Energy for this particular plant.
Well, okay, let me answer that. We are hoping to get the first tranche of payment in form of advance in the next 4 to 6 weeks' time. Once certain, formalities, are, completed. And the rest of the payment we will get once we have fulfilled the conditions precedent. And which basically is that we should be able to secure PPA for this 1,000. Some PPAs are already existing. We have to get more PPAs. And the second thing is that we have to arrange a regular coal supply for them. There again, we're optimistic for the simple reason that the federal government has now shifted some of the coal blocks and coal linkages over to the states, and the states will invite tenders from the power suppliers. And those who are winners, they will be given a coal linkage and coal block. So we, with our presence in Chhattisgarh for the last several years and being a very reliable supplier and being very competitive, we're very hopeful that we should be able to secure a coal linkage after participating in the bids invited by the state governments.
Okay, Mr. Uppal, just wondering, post the debt repayment, what will be the reduction in interest costs and the debt repayment tenor?
Well, if the debt goes down, the interest cost goes down with it. And fortunately, the interest rates are also coming down thanks to the intervention of the regulator. And the commercial lending rates will also follow soon. I think once they are done with with their non-performing assets, because right now the commercial lending rates are still very high. They're far above the lending rate of 6.25%. So I do expect that the interest rates which we'll have to incur will gradually come down, and that will also reduce our interest burden. That's point number one. Point number two, I've told you that in the next 4 years' time, how we intend to bring down the debt level from the present 46,000 crores to 28,000 crores in some quick steps, supported by the divestment as well as the organic earnings. So I think the international prices, as I mentioned earlier, for steel have increased substantially. That gives us much needed support. Some of the investment that we made, they have got commissioned now. The assets have become productive. So if you piggy ride on all these positive developments, I should see much more robust earnings in the quarters to follow. And I think that our first priority is to see that we pay off all our debts. Company is not going to do any new investments. We will remain in consolidation phase and make sure that we sweat out our assets that we have built up in the last 5 years.
Good luck with that, Mr. Uppal, and kudos to you to already begin on that path of the sizable debt reduction that you have in the pipeline for yourself. That's the management outlook coming in on the earnings and, of course, the deal between JSPL as well as JSW Energy. Where is the market right now? Still continuing to be quiet, 77.31. So a very, very quiet start, fortunately, with a positive bias. The broader markets are the ones which are outperforming right now. Quick break, more in the markets when we come back.